30 seconds. So 30 seconds.
It's like,
Good afternoon, everybody, and welcome to the session this afternoon. Waiting for a few more to join. There's quite a few in the lobby just coming in, so bear with us for 20 seconds, please, and then we will kick off. I think everybody's in who's coming. So afternoon once again. This session is probably going to last 35 to 40 minutes. And of course, the topic, as you're all aware of, is really how do we mitigate some of the recent increases that we've seen in terms of national insurance and changes in those thresholds. Everybody on the call can ask some questions across teams. If you need to drop a note, if we do get time, we will try and answer some of those if at all possible. If not, then we will come back to you over the next 4 answers directly, if that's okay. So really, this is all around EBNow being a strategic partner of the Institute of Financial Accountants, very proud to be so. And we've got a different spin really in terms of employee benefits, which a lot on the call, whether you're from industry or whether you're from practice, are going to be familiar with, but it's probably been never more relevant in terms of some of the capabilities that employee benefits offer in order to make sure that you can tighten the belt, but in order to still maintain the growth that you're on, either as a business or that your clients are on at this moment in time, and ride the waves really in terms of some of these increases that have been thrown at business in recent weeks and are here to stay. So we've got to really adapt and make sure that we can still achieve all of those objectives. And I think we'd agree, in whichever industry, whichever sector you're in, people are pretty central to success. Whether it's this year's revenue that you're talking about, whether it's a 3-year strategy that you're trying to achieve, or whether some on the call here may well have some exit ambitions at some point. And of course, once again, people are always going to be pretty critical in terms of you achieving those milestones. So they need to stay. But of course, that asset in terms of that people resource has just got a little bit more expensive. So today, really, we're going to look at the topic with a lens of 2 ways. One, some of the tax breaks, and of course, you will be well versed and on point in order to advise accordingly on what that means to you or your clients, but also from a business advisory piece, which I know is the pivot that the IFA are trying to take to make sure that you're the go-to in terms of how do I actually achieve the business plan, but still enhance the bottom line and make sure that we're fit to grow and fit for purpose. Some of the topics that we'll touch on, and there are 5 or 6 ways that we'll share today, are either a little bit tactical in terms of something that you can introduce straight away and that you can reduce the costs of the payroll immediately. Some of those you'll probably want to table during this year's salary negotiation. We're all going to be in that position where we will have employees coming to the table with expectations or needs and requests of X £1,000 increase on the current salary. There is a cost of living crisis. It's been a challenge out there, but it's also a challenge for business owners. So we've got to try and find a balance that is going to please all of the people all of the time, which of course is always a challenge. So I'm going to be joined today by 2 colleagues. We're going to have Rich Basford, who is the Director of EBNow Financial Services, with a particular discussion really around how pensions can play a part in reducing cost at this moment in time, and Mike Dixon, who runs NetMonkeys, which is a very seasoned and successful IT consultancy. And Mike's view, he's going to give just a short anecdote really as to how some of those efficiencies can be realized to make sure that you enhance your business process without maybe having to recruit maybe all the people you had in plan over the next year. So again, trying to reduce some of those costs. So let's kick off really. Why are we talking about this at all? Why are we here? So employee benefits has been the domain of the, I guess, the enterprise space, the big boys. If you've got 500 employees or 1,000 employees, then this is the norm. This is something that you have a whole range and a whole suite of capability. But actually in the SME market, and particularly in the S, it's quite a barren area, or they are disparate in terms of how they're deployed. And if you think of the logic, if you've got 30 people rather than 3,000 people, it probably is a bit more painful when you lose one or two key lieutenants in the business. There's going to be an impact to all sorts of things. So actually, is it not sensible to try and not allow that to happen in the first place? So we've gone to the marketplace and we've spoken with 22 service providers in various guises, and we have essentially negotiated the enterprise costs and pricing in order to bring to the SME marketplace. We put that all in one place, all on one platform, and it will be tailored in the brand of the client. So if that is you in practice or you in industry, Smith Engineering or the like, everything has that emotional attachment in terms of offering your employees a suite of benefits, which is enhanced just to the core salary. And, you know, typically in the sort of 21 to 40 age range, values and what you stand for and employee benefits are genuinely valued, as well as the salary that is on offer at this moment in time. There was a recent survey. I'm not going to take you through all of these stats. You'll be pleased to know, but it's really to illustrate the point. A survey in January from YouGov that looked at 900 SME businesses and really how they are positioned against a sort of larger type or a smaller type. And you can see there's quite a disparity. Just look at one, private medical insurance. If that's being offered, 84% in the larger organizations versus 35% in smaller. Now, of course, there's an ambition and a desire for SME businesses to be able to give everything, but it has to be at a price point and there has to be value. It can't just be given because they feel it's the right thing to do. But there's lots of metrics that actually will translate into making sure that it enhances the bottom line, whether it improves retention, improves productivity, improves focus, and just getting the job done in a timely fashion, professional manner. All of these stats come to bear. So actually, there is a very positive reasoning as to why employee benefits deliver for the right reasons. But of course, here today, we're talking about the commercial value, the pounds, shillings, and pence, and how we can probably help some of those. So for those that aren't quite sure or on the same page as employee benefits, we're talking about things like health and well-being and salary sacrifice and perks and benefits and reward and recognition. And all of those can play a part in actually offering value to an employee without having to have the whole increase that may be expected or anticipated. But actually you can give the same or indeed even more value when you're talking about what does the take-home pay look like by using some of these products and solutions. I'm just going to touch on the well-being piece because we're going to have a separate session around well-being during the course of these webinars later in the year. But suffice to say that part of the EBNow solution gives well-being around physical, around mental, and around financial. And one of the key points which a lot in enterprise enjoy today, and some of you on this call I know will probably have it as well in various guises, but things like online GP or being able to speak to a counsellor and being able to speak to that individual within 24 hours and make a difference not only to the employee's well-being and make sure that they get the right support as soon as they can, but also it does help the employer just make sure they're back to work or they're in the right zone and they're in the right mode to do these things. So well-being is a whole topic on its own, but again, there is value in giving this to not only the employee, but the employee's partner and family. So all of this cuts across not only the person in the job, but also people who are actually in the family itself. So let's start with some of those that we can see some actual, real, tangible benefits. Salary sacrifice. And there are three topics: home electronics, cycle to work, and the car scheme. I'm going to talk in detail really about the car scheme, and I will touch just briefly on the home electronics and the cycle to work. So essentially, home electronics is an area which isn't commonplace, but will allow employees to go and buy white goods or otherwise over a period of time without credit check and have salary sacrifice from gross pay. So the net cost to them is less. And I'm going to give you a little story of a real case that I encountered only probably a month ago in a manufacturing company in Yorkshire, where they had a relatively low skilled, low paid, but not minimum wage workforce. And in that instance, there was a situation where one of the employees had a washing machine breakdown on a Wednesday and a fridge freezer breakdown on the Friday. At the moment, they try and do the best they can as an employer, and they would signpost that individual to a local charity to try and help out. They don't need to do that if they have this solution. You can go into the app, you can look for the white goods, you can acquire those white goods, and let's suppose, easy maths, it's £1,200 over a couple of years. £50 a month would be taken from salary, so circa £30-35 of net cost in real terms, and it can be addressed immediately. And there is a tax benefit to the employer in terms of the reduction in national insurance and the offset against corporation tax. But the real win in that scenario is making sure that on Monday, Johnny, in that case, the son, can go to school in clean clothes and fed, and the employee is delighted with their employer, back at work, not distracted, focused on the job. Cycle to work has been around for many, many years. Most of you will be aware of how that operates in terms of offset. The car scheme is the real hot topic, and it's a hot topic because it makes quite a considerable difference in terms of the value, and because electric cars now we're not having the range anxiety that might have been there only as little as a year ago, and there are a lot of cars flooding the market. And of course, when you come to areas like benefit in kind and you're comparing a salary sacrifice scheme against maybe a company car, then the salary sacrifice scheme starts to win off in any event. But even if there isn't a company car scheme, but you're going for the salary sacrifice, this starts to make a lot of financial benefit to your employees. Now, it doesn't fit anybody. It doesn't fit everybody, I should say. And of course, there are a few things to consider. But you as an employer will always set the policy, or indeed your clients as the employer will set policies. So you may choose to set it at a certain salary range, or a certain job role, or a certain tenure of how long that they have been with the business, in order to make sure that it really seen as a value add in terms of what the employer is offering. Some of the common questions really are: is there a deposit? No. So it goes from month one. Is there an exposure to the employer? There shouldn't be, providing that the structure, and there isn't on our schemes in terms of Tusker, if you have basically the gap insurance, which is built into the premium that is paid on the monthly basis by the employee. So should anything happen during the term of the sort of 2 to 5 year arrangement per car, i.e. person leaves or the like, then they can hand the keys back. You can hand the keys back as an employer, and there isn't the exposure. Now, I will say that with Toro, depending on the value of the car and the type of gap insurance scheme, but providing that the scheme is being arranged with both of those in mind, it works, and the exposure is indeed very, very modest. So let me just put a little bit of meat on the bones on that. And I'll tell you again from the same YouGov survey in recent times, typical salary where it is adopted, in fact, really enjoyed, is £42,000 and north of. So what we've done here is we've taken a figure of where it might be £55,000 without salary sacrifice, because of course you may get a double win. This year's salary negotiation of somebody who is just below and in the basic rate of tax, that salary increase may take them over the threshold. Thereby, the perception is they're going to get more than they may actually have in take-home pay, because of the difference, of course, in going to the next tax band. So this is where particularly senior management team, leadership team, or those with a particular tenure in the business, it really is prudent to start to consider, is a car something that we should look at? Now, this gives a scenario where somebody's already looking at, maybe I buy the car myself, I go and get a personal contract purchase, I'm going to maintain it, I'm going to insure it. And of course, what that really means is it all adds up to, in this scenario and illustration, £500 a month. Now, of course, that means the salary is the salary of that £6,000. and there's an NI payment to the employer of just under £260 on a monthly basis out to that range that's going out the door. If you look at the salary sacrifice being embraced, taken on board in the same scenario, there's an employer national insurance saving of £900 a year. So straight away, it's a win if you keep. Now, again, some schemes allow the employer, as we do, to make a judgment call. Maybe you gift some of that back in terms of enhancing the value of the type of vehicle that the employee wants to go and choose. And I should say this is designed all around the low emission or electric vehicle, where of course we are looking at now just a slight increase on benefit in kind. It's just gone from 2% to 3%. But even with that considered, you can see that there is a net benefit of the same £500 being deducted from salary gross. So the net gain to the employee is near on £2,000. So now if you're being asked, for example, for a £5,000 increase, you can gift some of that £5,000 increase by way of the benefit of a salary sacrifice scheme. You may make the saving and keep the saving of £900, and the net cost to you to actually give the same feel of a £5,000 increase is only a couple of £1,000 as an employer. So wide range of vehicles, wide range of terms, up to 5 years, low risk in terms of exposure to employer at this moment in time. There are some restrictions, of course, on all salary sacrifice from HMRC, as you will know, is that you can't go below minimum wage. But even when you go into our portal and you start to look at the sort of cars that you might have for the salary that you're on, we have a little buffer. So actually it does give a bit of coverage. So we're never going to fall below what that might look like. And it's a safe solution to make sure that we are compliant in all terms from HMRC. So salary sacrifice on the car scheme, hot topic of the moment, one to consider for sure. Very briefly, I'm going to make mention of reward and recognition again. This is another topic later in the year that we'll touch on in more detail. But suffice to say that having that team environment and having it on the app that you can say thank you to a colleague and that's published out to the whole workforce, that's really enjoyed, particularly by Gen Z. And the positive ripple effect is, and we see this time and time again, is where that individual posts that thank you out onto their own socials. So whether that be onto TikTok or Instagram, and of course, that achieves a couple of things. One, it gives a great brand impression of the organization as a great place to work in the first instance. But then there's a tangible gain that next time you're on a recruitment drive, maybe you don't have to go and spend £5,000 or £10,000 in recruitment fees. Maybe there's already people who are keen to engage with your organization because they've seen the positive press that's come out from employees who already work with you. So reward and recognition can really be a positive gain to enhance bottom line, but also give great positive enjoyment, I guess, to the workforce. Perks and benefits. Been around a long time, you all would have seen these before, but lots of discounts from about 600 retailers, all the usual suspects in there of Tesco's and Costa and Argos. The reality is, if you go to Tesco's to do your shopping today, well, continue to go to shopping at Tesco's tomorrow, and you'll now get 4% off, in addition to all of the other incentives that are there. The problem or the challenge over the years of this is they get forgotten about, they get launched, and then people, they sort of forget they have it. Well, now it's on the phone. Now it's just a QR code. Now it can be scanned at the till. Now you can use it for an online purchase. And because it actually forms part of our whole content management solution, it's a go-to. So you as the employer or your clients can have a whole content suite on the app. So if you want to have employee policies, employee handbooks, you want to have the wage slips, reasons that they would go to and utilize the same app on a daily or weekly basis just means it becomes a bit more habitual than it may have been before. So that sort of takes me through to the headlines really on the salary sacrifice in terms of what is on the app. I'm now going to pass to my colleague Mike, who's just going to talk you through an instance where just using IT in a very savvy way equally is going to enhance the bottom line. So I'm going to pass it to you, Mike.
Thank you, Paul. Hi guys, thanks to Paul. Really informative, and I'm delighted to be able to join the webinar today. Um, for my part, I just wanted to discuss some of the things that you may or may not know about your existing IT infrastructure, um, in terms of where we may be able to get some gains from the what we now see in day to day as the use of AI. Now, what I wanted to do is just uncover that a little bit, by talking about the difference between what you may, in general terms, know as AI, versus why we're hearing so much about it today, and that's through what we might know as tools like ChatGPT or Copilot. Um, and we've heard today a little bit about salary sacrifice, and we're going to hear more about pension restructuring, or pension structuring. But what if I told you that one of the fastest and smartest ways that people are mitigating the national insurance increases, um, and obtaining is to obtain maximum value from the current headcount, while increasing workforce and job satisfaction, while the SMEs are continuing to grow. And that's the kind of thing that generative AI in particular is making possible. Now, the difference between generative AI and artificial intelligence, as has been known in the past, is you could think about artificial intelligence as a whole as kind of a master chef. It knows all the ingredients that we have, it follows the recipes, and it judges what's good or what's bad. Whereas we now have with ChatGPT and Copilot, we have the experimental chef of generative AI. It invents new dishes, it improvises with what's in the fridge, and it'll sometimes surprise you with brilliance. Sometimes it'll also offer up something incredibly weird. And it's kind of more your Blumenthal than your John Turod from that point of view. So it's not, you know, this is what, AI is making things possible. It's not just about robots and hype. It's about real measurable people efficiencies, and that's really what I want to uncover a little bit more about today. Traditionally, business growth has meant adding more people. We all know this. Need more sales, hire more salespeople. Need more customers, expand your service team. That model's getting very expensive, and it's also very risky. Recruiting, training, national insurance contributions, pensions, employment risk, the list goes on. We all know that replacing an employee can cost up to 6 to 9 months of a salary. So this is where the good news is. With generative AI in particular, there's a new path opening up. You can kind of think about it like having Einstein working quietly away in the corner of your office. It's not just about getting things done faster with AI these days. It's about thinking differently. It's using AI as a force multiplier. So your people can achieve 5 times the output without 5 times the headcount. Einstein, he didn't just calculate faster, he changed the rules of the games. And that's what a generative AI is doing. It's coming up with brand new ideas. It's not just about speeding up tasks, it's about enabling completely new ways of working and delivering value. Increasingly, employees and customers will expect businesses to use AI smartly. It's the same way cloud computing became a hygiene factor in IT. AI usage is rapidly becoming a basic expectation. The really good news is that many of you have already got tools within your existing Microsoft licenses that can help you automate processes and leverage this type of AI. Some additional tools like Microsoft Copilot and AI Builder are being integrated right now into your tool set, and these come at just a small, relatively small monthly cost. So the most powerful generative AI technologies that people have been talking about for the last 18 months are not just for the big corporates. They're now accessible and affordable for businesses like yours. Many of you already have these kind of capabilities I've said built into the Microsoft licenses, and adding Copilot, you could start automating tasks, generating content, and freeing up valuable time without spending huge amounts of money or hiring expensive AI consultants. It's not just about the futuristic investment anymore. It's about making the most of the tools that you've got at your fingertips. As an example, in the last six months, we've helped a single accountancy firm by using AI to do their compliance checks, the tax calculations, a lot of the client reporting, and this company has saved 20% of their senior staff time in order to make those business benefits and gains. In other areas where we've helped, generative AI handles the content of the drafting content, customer queries, with automatic agents handling queries that come through the customer service desk. So at the moment, we're in a position where small businesses are punching above the weight. These AI models are everywhere: chatbots, code writing assistants, image generators. These tools are incredibly powerful. It really isn't just about the tools. It's not humans versus AI. It's humans plus AI. AI handles all the heavy lifting for us, while the humans bring us the creativity, the emotional intelligence, and the strategy. AI is now becoming an expectation that employees who know how to collaborate with this AI are going to thrive. We've gone through now the stages over the last 18 months where we have denial through to the positives. The denial that AI won't affect us, it clearly has. AI is coming for our jobs. It's not necessarily coming for our jobs. It's going to improve the value that we can bring to businesses, and it's going to improve job satisfaction. We're now talking right through to the positives, is how we're going to use AI to help us grow. So focusing on this, it adds value to the employees. As Paul talked about Gen Z, employees are now starting to expect to be using these tools, and that's only going to help the businesses. How are we going to do this? Well, we can start by automating routine tasks, admin, document queries coming into the systems, focusing on giving the people more high value work while generative AI takes care of the grunt work. We pick in the low risk and the high reward projects to get people started with AI, and this also allows you to upskill your team by using generative AI as thought development. So AI is not for the future. It's for today's opportunity. We're looking to double your output without doubling your headcount. So if what you've heard today is of interest, please don't hesitate to reach out to us. We offer AI discovery workshops to help you find easy wins and build a strategy that works for your business, aligning the technology with your business goals. I hope today's been informative for you, and thanks for listening.
Thanks, Mike. Yeah, so I mean, without repeating all that Mike has said, because you probably thought, what does IT have to do with national insurance saving? I think I've been really clear as to how that can be not only a national insurance saving, but a whole salary saving if you get this right in terms of fueling the growth in there. And again, there'll be more in this series as we go through the year with IFA, looking around people-centric activities, which are IT orientated, but sweating the assets, I think, is the phrase that you've already got and that your clients have already got. They're already paying these license fees, and what Mike's team is enabled to do, and through experience and working with the accountancy bodies, is use all those assets to a better gain. So thanks for that. More of it to come later on. Moving on, we're just going to touch now a little bit on salary sacrifice from a pension perspective, and I'm going to pass to my colleague Richard Basford, who's going to give you a couple of illustrations as to how, and apologies if some of you would understand this, I appreciate in terms of the accountancy community, but I will say that I've spent a lot of time with accountants in recent months, and a lot of either their own practice or their clients haven't actually taken this process on board just yet. So Richard, if I can pass to you.
Thanks, Paul. Thanks everybody for joining. It's lovely to be here today. So I'm coming from a pensions employee benefit basis, and just expanding on some of the salary sacrifice discussion, and also looking at hoping to improve the outcome for the members of pension schemes. So I think very, very wary of it and conscious of the audience. So the obvious advantages to employers of salary sacrifice with pension contributions, it triggers savings for the employer potentially. So Traditionally, as an industry, pensions industry, we implemented salary sacrifice. We used to call it salary exchange or smart pensions. There were other names for it. And traditionally, as an industry, we took those national insurance savings from payroll and we bundled them into the pension scheme and increased the pension contributions that were going on a monthly basis. The benefit potentially 10, 15, 20 years down the road when that member reached retirement age. The current trend now with salary sacrifice and pensions is to capture those savings today, and for the employer is to say, okay, well, if the members are implementing salary sacrifice, there is an immediate saving to the cost of employing that member of staff. And I'll go through and show you an example in a moment. And for the members, similar. So we're capturing that national insurance saving through payroll. And what we're doing is sending that national insurance saving more commonly now straight to take-home pay the following month. So the member gets the benefit of salary sacrifice immediately, not in 20 years' time when they reach retirement age. So if I can show you a case study, and we've just used a different figure here with salary compared to the one that Paul was showing you with the company car example. We're kind of looking at kind of national average figures. So an existing pension fund value of about £30,000, somebody earning 35,000 gross salary, with a 9% total pension contribution in line with auto enrolment requirements on a 9% of basic salary as a pension contribution. So 5% employer contribution, 4% gross member contribution. So from the employer's perspective, the cost of employing that member of staff, you look at the national insurance, which is now quite eye-watering with the reduction in the threshold down to 5,000 before NI becomes payable and at 15%. So the middle column there, the cost to employing that member of staff, £4,500 of national insurance, £1,750, 5% pension contribution on top of the gross salary. So it gets us to a total annual figure of 41,250. If the member reduces their salary by salary sacrifice, 4% reduction, it brings the gross salary down to 33,600. That's how much will then go through payroll, and that is the rate. That is the annual salary on which the employer will pay their 15% national insurance. So the employer's national insurance bill drops, and for that member there, it's just over £200 a year. So looking at, we kind of base our figures on a head count of around 50. So simply implementing salary sacrifice, saving the employer NI is a £10,000 a year saving back to that employer. We still got the same amount of money going into the pension, and that's the key thing. So the pension is still getting the pound that it's owed. There is no reduction in the pension contribution going in. It will still be 9% of the original £35,000 salary. And if we're looking at other benefits that are linked to salary, such as group life assurance or income protection, then that, let's call it the full pre-sacrifice salary of 35,000, that can be maintained within those benefit bases. So if we're covering the members of staff for 4 times salary, that group life assurance can still run at 4 times 35,000 to cover that member. So the member's not sacrificing group life benefit in order to take home a bit more take-home pay now. That's not what we're trying to do. It's trying to say, okay, we'll keep the existing benefits the same amount of group life, the same amount of pension contribution, but we'll try and capture that national insurance saving. So that is the viewpoint from the employer. From the member's viewpoint, obviously we've got income tax to pay on that gross salary, personal NI, and a net annual pension contribution. So again, the middle column, toss all those up or deduct off the costs of tax and pension contribution. That member would take home £27,599. We move across the salary sacrifice. The income tax bill comes down. The national insurance bill comes down because it's a lower salary that's going through payroll. There is no pension contribution being paid by that member anymore. So because the sacrifice has been taken before the money gets to payroll, the 9% that goes across to the insurance company for the pension contribution gets documented as an employer pension contribution. So it's still 9% of 35,000 that's going into the pension scheme, but from the member's perspective, their personal pension contribution will fall to zero, and therefore the take-home pay across 12 months increases, and say it's about £10 per member per month that we're looking at as an increase in take-home pay. And as I say, exactly the same pension contribution going in. So then we can take this one stage further within the group pensions marketplace. So we can implement salary sacrifice within an existing pension scheme. We don't necessarily have to change the pension scheme itself. Salary sacrifice itself is a payroll process, and it's simply explaining this to the members, the pros and cons from their viewpoint. And then with the pension provider, it's making sure that future contributions are documented, that they are employer contributions going in. The insurance company doesn't have to reclaim any tax relief on behalf of the members because it's getting its full money coming in from the employer. So there's no requirement to change the pension scheme itself. However, there is the option to do so. So the group pensions market in the UK is very, very competitive. So every UK employer has a pension scheme in place. So if you are the sales director of Aviva Group Pensions or Scottish Widows Group Pensions or Royal London Group Pensions, where do you get new business from within your company? And the only way you can really get it, there's hardly any new schemes being set up in the UK because every employer's got one. So really the only way that you can gain new business if you're one of those big group pension providers is to steal it off somebody else. And the way that you would generally look to do that is to undercut the current price that pension schemes are being charged at. So we've got a marketplace which is competitive. There are 6 to 8 group pension providers out there. It's a little bit like supermarkets. They are household names in the main. And we have a market where existing pension schemes are what we call clean. So what that means is there's no penalty for moving away from an existing scheme. And to set up a new scheme with another provider is, for the member's perspective, is free. So if I've got £10,000 in an existing pension scheme, I want to move it to a new pension scheme tomorrow. There's no penalty for me moving my £10,000 away from my existing pension. There's no setup cost with me transferring that £10,000 into my new group pension scheme tomorrow. So from a member's perspective, I can move the money around the marketplace if that's what my employer chooses to do, to move the pension scheme from insurance company A to insurance company B. So if we look at that same example member that we were looking at with the payroll changes, so salary 35,000, pension fund value of 30,000, so 9% of the 35,000 going in every year. We're assuming that pay goes up to 3% per annum, that he or she is 40 years old, they'll retire at age 67. And then we have these, what at the face of it look like quite low charges within the pensions industry. So there is a maximum charge on group pensions on the default investment fund within a workplace pension, and that is 0.75% per annum. So what that means is that the insurance company is charging 0.75% per annum on the value of every member's fund every year. The insurance companies are the ones, they employ the actuaries. They know what they're doing in terms of long-term growth and long-term revenue and long-term profit for their own business. So they're looking at this over the long term to say, okay, we know that this member, his contributions are going to carry on going in. Hopefully there's going to be some investment return in there. That fund value is £30,000 today. It will grow and it will grow and it will grow, all things being equal. So we have a kind of a default within the industry, and there is an awful lot of schemes out there being charged 0.75% per annum. The current market rate that is quite easily achievable, and this will be large. If you work for a larger organisation, you may see a lower annual charge than this, but I'm just trying to give you a kind of a national average. we can generally achieve terms of about 0.35% a year. So it's a 0.4% saving. And it's a little bit like taking the handbrake off your car. Like the car will move a little bit quicker without the brakes applied to it. So if we look at an investment return of 6% per annum on a 0.75 charge against a 0.35 charge for that member, and you project that member through to retirement age, that is the difference in the projected fund value from that 0.4% per annum saving. So we're looking at an improved projected fund value of £36,000 at retirement age, 9.5% a year, and that is 9.5% additional pension income for that member every year throughout their retirement, and 9.6% increase in the value of their fund should they die, and the money go on to their spouse, widow, widower, partner, children, grandchildren upon their death. So it's a significant improvement that can be made. And again, if we're looking across 50 members, that's 1.8 million projected increase in the size of the scheme when you run it forward. So be delighted to have a conversation with you if it's relevant. Implementing salary sacrifice on pensions, potentially changing the provider of the pension, or doing both. They are three potential outcomes, if you like. So we can implement salary sacrifice on an existing scheme. If salary sacrifice is already in place, we can move the scheme from A to B and just do that as an exercise for you. Or potentially we can do both in one go to change this pension scheme to salary sacrifice, and also change the provider if we can get better terms out there in the marketplace. So thank you very much for your time, and I'll hand back to you, Paul.
Thanks, Richard. Okay, I think that's food for thought on everybody. Just the increase in the pot alone, let alone the savings on the way, just make it a bit compelling to drill further. And as Richard said, fully available at great expense, obviously, in order to talk to you on a one-to-one basis if need be on those. Just a couple of points now as we wrap up, really. Again, people-centric and how you can mitigate some of this year's salary negotiation. Skills and training is an area which, obviously, if you've got some personnel who are keen on personal development to get a level of experience or accreditation, there is skills funding out there. We know where it is. Sometimes it is match funded, sometimes it's more than match funded. It varies region by region and role by role, sector by sector to an extent. So it's quite a landscape out there. But one of my colleagues, Dawn, is well versed in where that might be. And again, if you can trade, or your clients can trade by undertaking and enabling some of these courses during the course of the next year or two, in lieu of having to increase salary, thereby there is the obvious saving that comes with that approach. In addition to that, we've got a lot of business coaching and leadership coaching, which we wrap in as a sort of try before you buy. So 90 minutes of leadership coaching for some of the people by dealing with EBNow. But we'll talk about skills training and coaching again in a different webinar a little later in the year. So we're just about on time. We're right up on the 45 minutes. There are a couple of questions. We'll come back to those that need answers to those as we go through. We will be in touch if that's okay with everybody over the next day or two. So if there is any particular one-to-one questions or one-to-one meetings you'd like to hold to drill down further on any of the topics that we've talked about this afternoon, then we'd be obviously delighted to do so. So it just remains for me to say thanks very much to Mike, thanks to Richard, and a great thank you to everybody who's taken the time out of sitting in the sun and having a lunch in order to attend the last 45 minutes. And hopefully we'll get to talk to all of you very soon. Have a great afternoon.